Ladies and gentlemen, Asian guy here, and what I'm about to reveal will fundamentally change how you view the silver and copper markets forever. President Trump just triggered a 180-day economic time bomb that could force an entirely new minimum price system on critical minerals. Yes, including silver and copper. And this isn't about tariffs. This is about something far more powerful and terrifying called price floors. You're not going to believe what just happened. While everyone was distracted by headlines about trade negotiations, Trump quietly armed the most devastating economic weapon in the government's arsenal. A weapon that can reshape the price you see on your screen without firing a single shot, without imposing a single tariff, through pure market manipulation disguised as national security policy. The clock is ticking, 180 days. That's how long foreign suppliers have to accept America's new pricing terms or face complete exclusion from the world's largest consumer market. But here's what makes this absolutely terrifying. The real deadline isn't day 180. The real deadline is when large buyers panic and start stockpiling, which could happen any day now. Let me explain exactly what price floors mean and why they're more dangerous than any tariff ever imposed. A tariff adds cost to existing prices. A price floor completely eliminates everything below a certain price point. Period. No exceptions, no workarounds. If the government says imported silver cannot enter America below $120 per ounce, then $119 silver simply doesn't exist in the American market anymore. Do you understand the implications? This isn't just changing trade. This is rewriting the laws of supply and demand through government decree. When you eliminate the cheapest supply overnight, everyone has to compete for the next cheapest supply. Prices don't rise gradually. They gap up instantly to fill the void. But here's the truly diabolical part. This 180-day countdown creates a front-running frenzy that drives prices higher before the policy even takes effect. Smart money knows that waiting until day 180 means paying much higher prices, so they're accumulating now while the public is still confused about what's happening. The mechanism is brilliant in its simplicity. Trump isn't starting with tariffs because tariffs look aggressive and invite retaliation. Instead, he's offering negotiations with allies to establish coordinated minimum pricing to stop predatory dumping. It sounds diplomatic, it sounds technical, it sounds reasonable. But make no mistake, this is economic warfare disguised as trade policy, and silver and copper are ground zero. Why these two metals? Because they're the bloodstream of America's industrial future. Every electric vehicle needs 2 to 3 ounces of silver and 180 pounds of copper. Every solar panel needs silver conductors and copper wiring. Every 5G tower, every data center, every grid modernization project, all of it depends on these metals. China controls 60% of global silver refining and 40% of copper processing. If they can flood American markets with below-cost metal, they can destroy domestic mining and processing capacity, creating permanent dependence. Trump's price floors would flip this dynamic overnight, making foreign dumping impossible and domestic production profitable again. The timeline is absolutely critical to understand. Month 1. Headlines and confusion as markets try to figure out what this means. Month 2. Progress stories and optimism as negotiations appear productive. Month 3. Growing anxiety as deadlines approach. Months 4 and 5. Panic buying as industrial users realize they can't risk waiting. Month 6. Complete chaos as policies take effect. We're currently in month 1, which means you're still early to this trade, but that window is closing fast. Here's what happened in the markets when this news broke, and why it proves the smart money is already positioning. Silver dropped violently on the initial announcement, then got bought aggressively on every dip. That's not random. That's institutional accumulation disguised as volatility. They're using the confusion to shake out weak hands while building massive positions. Copper showed similar patterns. Initial selling, then persistent buying that wouldn't let prices stay down. The message is clear. Professional traders understand this policy creates artificial scarcity, and they're positioning accordingly. But the physical markets are telling an even more dramatic story. Silver premiums over spot prices have spiked to $8 toward $10 per ounce as dealers struggle to secure inventory. Some products are showing 6 to 8 week delivery delays. The U.S. Mint has paused certain silver products because they can't price them fast enough to keep up with the volatility. This is what supply crisis looks like in real time, and we're just at the beginning. The genius of Trump's strategy is that even successful negotiations still result in higher prices. Because a successful deal means allies agreeing to minimum pricing frameworks. It means commitments to avoid dumping. It means coordinated stockpiling. Success doesn't mean cheap metal. Success means legitimized price floors. Let me paint 3 scenarios for how this plays out, and you tell me in the comments which you think is most likely. Scenario 1, smooth negotiations. Allies quickly agree to coordinated minimum pricing. Supply continues flowing, but at permanently higher, government-sanctioned price levels. Volatility decreases, but prices never come back down. Scenario 2, chaotic negotiations. Talks drag on with daily headlines flipping between optimism and fear. Markets whipsaw violently as traders try to game every rumor. A last-minute deal saves face, but includes enough exceptions and loopholes to keep uncertainty high. Scenario 3, complete breakdown. Negotiations fail spectacularly. Minimum import prices and Section 232 national security restrictions slam down like a hammer. Foreign suppliers get locked out. Domestic prices explode as buyers fight over limited supply. Here's the terrifying part. Even if you think Scenario 1 is coming, markets can trade Scenario 3 for weeks or months, driving prices to levels that seem impossible today. The Section 232 authority is particularly important to understand because it's not a trade tool, it's a national security weapon. When something becomes classified as a national security threat, it gains political immunity from normal economic criticism. Politicians can't be accused of protectionism when they're defending America's strategic independence. This classification opens the door to quotas, tariffs, outright bans, and preferential treatment for allied suppliers. Once that door opens, it rarely closes because reversing national security policies looks weak politically. But here's what most people are missing. This isn't just about import restrictions. This is about rebuilding America's processing and refining capacity. The bottleneck isn't just mining, it's converting raw materials into the forms industry actually needs. If America wants true independence, it needs domestic processing facilities. That requires massive capital investment. That investment only makes sense with guaranteed profitability. Price floors provide that guarantee. So we're not just looking at higher metal prices, we're looking at a complete restructuring of North American supply chains. Mining companies with projects in the US, Canada, and Mexico suddenly become strategic assets. Their economics improve dramatically under price floor protection. The investment implications are staggering. Physical metal becomes a store of value protected by government policy. Mining companies with the right assets in the right jurisdictions could see their valuations multiply as they transform from risky resource plays into strategic infrastructure. But timing matters enormously. The best opportunities exist right now, while markets are still confused and prices haven't fully adjusted to the new reality. Once the implications become obvious to everyone, the easy money will be gone. Watch for these signals over the next 180 days. Announcements about joint strategic stockpiles with allies, new funding for domestic processing facilities, fast-track permitting for critical mineral projects, and long-term offtake agreements at guaranteed pricing. Most importantly, watch for industrial users to start securing supply through long-term contracts. When Tesla, Apple, and other major manufacturers decide they can't risk waiting for policy clarity, they'll lock in multi-year deals at current prices. That buying wave could trigger the gap move higher that changes everything. The currency implications are equally massive. If America successfully establishes price floors for strategic materials, it demonstrates the power of controlling the world's largest consumer market. Other countries may accelerate efforts to reduce dependence on dollar-based trade, but that takes decades to implement. In the short term, this policy strengthens the dollar's role as the global reserve currency by weaponizing America's import capacity. Countries that want access to American consumers will have to accept American pricing terms. But there's a darker scenario lurking beneath the surface. If price floor negotiations fail and turn into a broader trade war, we could see retaliation against American exports, alternative trading blocs forming, and the beginning of a true decoupling of the global economy. The metals markets would explode higher in that scenario as countries rush to secure strategic resources before supply chains fragment completely. Silver and copper could reach prices that seem impossible today simply because the integrated global system that kept prices low breaks apart. For individual investors, this creates both massive opportunity and significant risk. Physical metals become essential portfolio insurance against supply chain breakdown, but you need to secure supply now, while it's still available at reasonable premiums. Mining stocks offer leverage to the theme, but you need to be extremely selective. Look for companies with resources in stable jurisdictions, existing permits, strong balance sheets, and the ability to actually reach production. Policy support can make good companies great, but it can't save bad companies from themselves. The 180-day countdown isn't just about trade negotiations. It's about America's decision to weaponize its consumer market in ways we've never seen before. The implications extend far beyond silver and copper to the fundamental structure of the global economy. Smart money is positioning now while confusion still exists. The window for getting ahead of this trade is measured in weeks, not months, because when industrial panic buying begins, prices won't rise, They'll gap higher in moves that make today's volatility look calm. This is Asian guy, and the 180-day timer is ticking. The question isn't whether this reshapes global markets. It's whether you'll be positioned to profit when it does.